Retail real estate in 2026, stabilization, not a rebound, and why that matters. And after several years of disruption, U.S. retail real estate is entering a new phase in 2026, measured by stabilization rather than full cycle recovery. And while store closures are still expected to outpace openings, the pace of contraction is slowing, and selective expansion is underway in resilient retail categories. So, for commercial real estate investors, landlords, and business owners, this shift signals opportunity, particularly in well located centers and second generation retail space. And the numbers show incremental improvement, not a boom. So, industry forecasts project approximately 5,500 new store openings and 7,900 closures nationwide in 2026. And while closures remain higher, this represents an improvement from 2025 with fewer bankruptcies and less forced liquidation activity. So, retail churn at this level is not abnormal given the size of the US retail footprint. What is notable is the slowing rate of closures, though, and which suggests that balance sheets and operating models have adjusted to today's economic realities. Macro conditions supporting retail stability, and several macroeconomic forces are working in retail's favor. So think lower and stabilizing interest rates, which improves refinancing and expansion feasibility, but also resilient consumer spending, particularly among higher income households, as well as moderating inflation and easing margin pressure. And with stronger equity markets, that supports retailers' access to capital. And there's muted tariff impact relative to earlier expectations in the year or last year. But together, these factors have reduced the pace of retail bankruptcies and created a more predictable operating environment, something investors and lenders value highly. So, who's expanding and who isn't? Well, retail growth in 2026 is highly segmented, and leading expansion categories are some of these following, but off price and discount retail locations, but think beauty and personal care, but also value oriented and necessity based retailers. But contracting or rationalizing is another topic, but really department stores and specialty apparel and certain big box formats are doing well. There's select casual dining, QSR, and pharmacy operators. So, for commercial real estate owners, this reinforces the importance of tenant mix, use flexibility, and location quality over brand name alone. So, closures create an opportunity for strong assets. So, store closures are not uniformly negative, and many vacated locations are still well located and built out with existing infrastructure that can be taken over by a new tenant and available at favorable lease terms right now. And with very limited new retail construction nationwide, demand for high quality second generation retail space really remains elevated, especially in supply constrained suburban markets. Now, this dynamic is particularly attractive for investors who are seeking a value add lease up strategy kind of properties with re-tenanting opportunities, or redevelopment or adaptive reuse plays. So let's take a look at what this means for Texas as well as Houston, Katy, and Fulshear. In Texas, and especially fast growing markets like Katy, Fulshear, and West Houston, retail stabilization looks even stronger. And that's the convergence of population growth, household formation, and suburban spending patterns that continue to support neighborhood retail. So here's some key takeaways for local investors. Think grocery anchored and service based retail. Those all remain highly defensible. In second generation retail, near rooftops is going to always be in demand. But spaces with flexible layouts generally outperform single use spaces. And financing is available, but underwriting is a little more disciplined, is the takeaway there. But here's the bottom line: 2026 is shaping up as a year of retail rebalancing and not a retreat. And physical retail is no longer in widespread contraction, and it's adjusting to a more sustainable footprint. So, for commercial real estate investors and landlords, the opportunity lies in selectivity, in asset quality, in local market knowledge. And if you're evaluating retail acquisitions, leasing strategies, or financing options in the Houston area, now is the time to act with clarity and not fear. And that, my friends, is it for the day. Please visit HoustonRealEstateBrokerage.com. You can figure out how to get a hold of me, and I'd love to talk to you more. Take care.